Well, first of all, on behalf of O'Reilly and Tresata, I would like to welcome all of you, the three of you, to Strata. I know it's your first time here. And you're breaking two records. The first one is we have never seen these many number of suits and ties on stage at Strata ever before. So congratulations. We appreciate it. You guys look great. You guys make Strata look great. Big data sexy, right? This is fantastic. But also, I think I'm very excited about pulling together thought leaders in our industry and talking about a topic that's, I think, getting a lot more press outside where big data has kind of been birthed and has transformed the industry on the West Coast in the digital space, but obviously is near and dear to an industry that's close to us, but also is a key piece of our industry. And a common belief that the four of us have shared that as we come from some very trying times for our industry in the last few years, that a rebirth of our own industry is going to be driven by big data as well. So thank you for coming here. We really appreciate it. And with that, I want to start with my first question. I'm actually looking forward to this as much as you guys are. These guys are really, really good. I promise that. The first one comes from what I would call the constraints on our system, right? We've come from one of the biggest credit crises our generation has seen, probably will see, hopefully probably will see. Regulatory pressure, everything from Dodd-Frank to CFPB and acronyms that I don't understand, or I may understand, but a lot of the other people don't. A rapidly commoditizing industry, right from cap markets, trading to consumer banking. And then this massive democratization of technology that we have seen start on the other coast and rapidly come towards us. New tools, new technologies. And Richie, asking you, is this going to result in an emergence of new business models that fundamentally transform the industry?
Yeah, there's no question. So I guess it was Rahm Emanuel who said you can't let a good crisis go to waste. So I guess that's about the only optimistic thing I'll say with some of the regulation. But no, seriously, the Dodd-Frank Consumer Protection Act, if you look at one of the key transformations you're going to see is in the OTC derivatives market. So this is a very, very large, meaningful market, which was largely the domain of large banks, large institutional investors, large corporates. It's not for the faint-hearted, so to speak. And it's measured in hundreds of billions of notional dollars, some 600 billion outstanding of rate swaps today. And in simple terms, Dodd-Frank states if it can be cleared, it will be cleared. And if it's cleared, it must be traded on a swap execution facility. So if it can, it will be, and then it will be traded on a SEF, the swap execution facility. Without boring you in all the regulation, what that really will mean is that everything now, which was opaque and pretty much a bilateral market, only privy to those party to the contract, will now have to execute these contracts on these swap execution facilities. And very key to this is all of the transactions now are going to be converted to data. And the trade data, the execution data, will get deposited in what they call a SDR, a swap depository, swap data repository at the near end, so at the execution point. And at the back end, at the end of the clearinghouse, all the risk is then reported to the regulators. Again, data. So what was a fairly opaque market will now be a very transparent market. Mm-hmm. And there'll be just reams and reams and reams of new data that people will have available, and there'll be, as I said, this very opaque market will be transparent. So to your question, will something new emerge? Absolutely, this is a transformation of an existing market to a new market. But in doing so, there'll be a whole transformation of this execution process.
And doesn't this need a new ecosystem as well, Alan? So you've got a opaque industry going to a very transparent OTC market, a very transparent model. This crew here loves to talk about open data and transparency, right?
Sure.
So there's an ecosystem that needs to emerge around this to
absolutely. It'll be on both sides. From the financial institution side, just to add more challenges to what Richie was talking about, you add the capital requirements that get added on top of these businesses. Overnight, some of them suddenly become dramatically less profitable. So you've got a whole set of businesses on the capital market side, but also on the retail side that need to reinvent themselves, the mortgage business, parts of the card business, et cetera. And it will be, if you look at where most of the banks in at least North America are going, it's more share wallet, et cetera. They're all trying to develop this, and it will be through data. There are a whole set of new providers that need to spring up and help them do this, right? Managing all these interfaces, managing the data, drawing the insights out. They're just not set up to do this, right? They typically have operated in silos, and this, by its very nature, says I need to take a single view of the customer. Some are good at this, but many still haven't figured out how to do this. That's a real skill. And there are a set of tools and capabilities, many of which, as they explore cloud and other capabilities, will be done at least in partnership, if not completely outside the enterprise, to let this happen. So there'll be a dramatic opening up, right? It really will be in many cases. The banks have a lot less capacity to invest and build this themselves. The model has to be at the highest level open source to get there. So it will, I think, dramatically open, and new providers, new capabilities, et cetera, will be what you're going to see a lot of in the next 2 to 3 years.
Interesting. And Roy, you're actually leveraging some of this change, this dynamic reformation of a massively profitable, it used to be, but continue will be a profit pool, revenue pool industry. Yeah. And from your perspective, how do you see these opportunities emerging? Where are the pockets of these?
Well, I think it goes through stages. So companies first see the opportunity, and then they do kind of the obvious thing. They insource as much as possible. They gather their own data sets. They crunch it. It's a big secret, and they hope to have a competitive advantage. But as it commoditizes, other factors also become important, because by then their competitors also have done the same thing. So in the more commoditized world, data center scale matters. You can see this with Google. They built very large data centers, not many, many, many small data centers. The scale does matter. Your peak loads relative to your average loads matter. When you're doing data mining, you spend a long time thinking about what to do, and then it runs for maybe a few days or a few months. But there are gaps. You don't have a uniform workload. So if you could just share workloads with somebody else, you could kind of smooth it out and have your average capacity and your peak capacity be about the same, and therefore not waste a lot of money. And then finally, there's all the data that's going to come in. So Richie mentioned all of the data from swaps and so forth that will be available. That's exactly the data you need, but it's exactly the data everybody else in your industry needs. It's going to be expensive to assemble it, to clean it up, and to kind of massage it into a purpose. And that can basically be outsourced to a service provider. So I see eventually a lot more outsourcing happening in this market.
Yeah, very interesting. Now, I was remiss to do this, maybe a cardinal mistake to not introduce you when I started, but I think now that people have heard the perspective, I'll do a quick introduction.
Okay.
It wasn't by design, but I think it's going to work out really well. All right? So Alan Weinberg leads the banking technology ops practice at McKinsey. Richie Prager, head of global trading at BlackRock, the world's largest asset manager. And Roy Lowrance. Roy is a former CTO at Cap One and Reuters. That's an interesting combination, Roy. And is also the acting director for the Center for Computational Econometrics? Economics at Courant NYU. That was a big one, so I got to get right. So this is fascinating. You look at an industry that is going to transform. You look at these macroeconomic as well as technology changes that are happening around us. Some negative, not that positive, but probably a growth, an area for opportunity. And then you see these emergence of new models, as what you point, Roy, about a greater need for outsourcing some of the data capabilities to drive the transformation. And there is an elephant in the room that we always talk about in close quarters. I like to pose to the industry itself that you represent, which is data as a service, right? This whole notion of will financial services companies embrace the cloud? Whatever cloud may mean, not the water vapor in the air, but really, right? Data as a service, analytics as a service, the ability to mine the information, not housed within their own walls. What do you think our industry is something that will embrace that concept and leverage some of the new innovation as well as the new companies doing that?
So I think it will happen faster rather than slower. As I explained earlier, I think the economics drive outsourcing. I think as industries get re-regulated and then everybody quickly moves to a new, very competitive basis, advantages disappear and costs become important. Outsourcing also, using services, also lets you move more quickly because when new data sets become available, everybody needs to get access to them. And you can basically, those are scalable events, and an outsourcing service provider can actually scale where you can't. So I think you'll see more of it.
Interesting. Richie, any thoughts?
No, I completely agree. In fact, I'd say it's already here. It's not so aspirational. If you look in the markets where we operate today, our fine mayor of the city started there, and his Bloomberg data services are quite robust, very necessary to investors like ourselves. We see external data providers we have to insource for all sorts of things, just marking all our positions. We need an independent mark. Even though we have the data ourselves, we have a conflict of interest. We can't use our own data, so we have to have third-party data. So without question, that's a service already existing in the market and a growing space.
Alan, as you work with financial services companies, very large financial services companies in this country and beyond, what are you hearing from them?
I think I would agree with what we've been saying. I think coming out of the crisis, there was a big push towards sourcing. That sort of came back, tamped down a little bit as things improved. But I think if you look at most of the large IT organizations across banking, they are essentially looking out to a future where there's not a lot of growth, where there's going to be more pressure on costs. At the same time, more and more parts of their business are driven by technology, and so they need to increase spend. And they're saying we can't continue to do what we've always done, which is build it ourselves, build unique solutions for what in many cases are effectively commodity functions. And so you're going to see more separation. At first, I think you'll see it internally, use of clouds internally to create standards, and then that puts you into a what I would almost call a continuous sourcing mode, where you're finding more and more pieces of your environment that you can give to outside providers. Maybe, by the way, that's some of your own people operating in a different way, but you need a longer-term, lower-cost model to support the business going forward, and that's how they'll get there. So I would agree. I think you're going to see more and more of that.
As a quick follow-up to that, Richie mentioned, of course, that it's a storied mayor of the city. It is a cloud, right? It is absolutely a data-as-a-service company, massively successful. But as you think about this emerging trend, are you seeing some interesting companies emerge, new ones that we've not heard about, or new technologies or new ideas that could be interesting in that space? Alan?
So I think there are a set of new companies that are out there, all across the board, from data cleansing, data management. I think in particular around the critical issue for a lot of these institutions, which is how do we get the single view of the customer? That has been an issue where internally they've, in many cases, have hundreds of people, sometimes working together, sometimes not, to try and solve those problems. But there are a whole set of issues where there are some very interesting technologies, and it'll kind of sort out over the next 2 or 3 years. But I think you'll see new names that you haven't heard of become almost household names very quickly, just given the demand and the dynamics of the industry.
Why are some of these? Why are some of these issues? Right? I mean, I'm asking a bigger, broader question. Single view of customer would seem kind of logical to do and solve, and would have been solved. Facebook knows, I guess, banking customers better than the banks do, and has a single view of customer, broader, right? They know their social lives, they know their pictures, they know where they've been. Why is that such an issue in our industry today? Well, or things like those.
The simple answer, a lot of complicated reasons, but I think the simple answer is for most of these institutions, they have been run like silos, either because they grew through acquisition and didn't do that much integration, and so even on the front end where the businesses came together, a lot of the systems were kept separate, or they just did it intentionally as a way to grow quickly. And single view of the customer means having a view across those businesses and then being able to execute. So even if you had the data in one place, it wasn't always easy to figure out, even from the simple question of, if I hand a customer to you and give you information about a mortgage product, but I'm doing it from the card side,
right,
how do we manage that transaction internally and get paid for it?
Yeah,
so
interesting.
It's almost internal reasons as much as technology issues.
Does that transcend to not just a customer view, but also an asset view? The ability to look at an asset. So, Richie, I see you nodding.
Yeah, I mean, clearly, as an investor, I mean, we're a large money manager. We invest in a lot of consumer-related, assets, whether it be mortgage being the biggest asset class, or other receivables, credit cards, or even student loans. I mean, that whole securitized product was based on, a set of assumptions which we clearly learned in the 2008 credit crisis were wrong. So instead of looking at these traditional models, why not understand every discrete loan that underpins these assets? At which point we could really make great investment decisions if we had visibility and transparency to what the exact credit was on every discrete loan. So to Alan's point, if you see that total picture of that consumer, and then you package those loans together, there's no longer a mystery. I mean, we don't have to, rely on a rating agency model. We'll know the truth.
Yeah, interesting.
Roy, and it proceeds in stages. So you get to the stage where you discover, we can figure out every line, and we can know the credits discretely, and we can add them up, and then we would know something that the credit agencies don't know. So that's a competitive advantage. But then you wait several years, and all of a sudden your competitors are doing it. So now you need to shove that back into something that looks like a credit agency, right? Or you just read the data. And that's where the Bloombergs of the world come in, because what they have is this huge number crunching machine where they crunch all the data, and then they show you the result in a nice, simple graph that you can use to make a decision. So it's kind of a cycle.
It's an interesting a thought that came to me as you guys were talking about it, because you look at the core of banking, right, which is managing risk-reward efficiently for the larger economy, not just for the institutions. And it seems to me, as I hear you talk, that data analytics should be very pervasive in every single decision, whether it's consumer lending, helping a consumer age or make the right decisions, right, as an advocate of the consumer, to all the way to the points you made on the securitized assets, which at some point come from the same consumer. What Wall Street trades is coming from the consumer as well. How pervasive is it? How pervasive are data analytics as you look at the life cycle of financial services, right? We erred in calling this panel big data in banking. It's really big data in financial services broadly. How pervasive is data analytics in the industry? And given all the pressures we started off talking about, is it going to provide the competitive edge to the players as we look to transform the industry coming out of the crisis? Richie?
Yeah, I mean, again, from the institutional investors' view, it's a huge edge. So you look at our firm, we manage $3.6 trillion. If you look at the annual trading turnover, it's about $12 trillion per annum. We actually
that's
have
trillion with a T, right?
Trillion,
Okay.
TT.
Yeah.
Which unfortunately is the new billion. We believe in these analytics so much so we have a dedicated trading research staff, and we're loading sort of a daily basis about 3.5 billion bits of pieces of information, whether trade quotes or transactional information. Peak could be 8.5 billion. And we actively use these tools. We actively use them to understand, everything from trading cost and analytics to the capacity of a certain trade. At that sort of amount, you want to know how much assets are available in the market, and we want to analyze that. Look at performance metrics of our traders as well as our portfolio managers. And a lot of that, what I just said, is actually a rear view mirror approach. And then you turn that all around and look forward, and now it's about alpha. How do you create, alpha opportunities to outperform having that data? So these analytic tools are absolutely critical for us.
I would argue that the analytic tools and finding the right ones is maybe the easy part of the problem. So I think companies that do analytics go through stages. You first start with what I call the MBA analytics. Right, those are easy to understand. You can figure them out after a couple of years of trading. You can teach everybody on your staff to work with them. And you can have a whole management system that depends on that type of information. But after you crunch all of the MBA stuff, you need to get into the data mining and machine learning stuff. If it applies to your industry, that's much harder. And the people who talk about that stuff have their own private vocabulary. Right? And so now what you need to do is you need to hire them in and figure out what they're doing and then figure out a way to work with them. So you can go badly wrong by having a very advanced number crunching group that you keep in the corner. Right, so the essence of Richie's story is they have a very advanced number crunching group that they keep around them, and they talk with them, and they figure out what they're saying to do, and then they actually do it. You think about the story of Capital One, an extremely successful analytical credit card company. Did they have the very best analytics? No. What they believed in, though, was they believed their analytics. They were very state-of-the-art for the time. And then they would actually execute their business plan based on what the analytics said were the right thing to do. And imagine your company does the same thing. So that's really the hard part.
Right.
You can buy the skills, right? But learning how to manage with them and believe in them and trust them enough so you can act on them, that's much harder.
So I have a follow-on question for you, Alan, as you wrap up. Kind of bring it up. Big opportunity, industry that needs a transformation, big data analytics, a critical component of how the industry is run, built, has been built, will continue to be efficiently transformed for the larger benefit. What are the gaps? You need big data. You need the analytics. Obviously, we know, as Richie, you said, there were assumptions that were made that we all, Emperor had no clothes, right, during the credit crisis. What are the gaps? What are the gaps that need to be plugged? Alan, any?
It's a great question. I think, by the way, the answer, I'll try and answer it quickly, but it is quite different on the wholesale versus the retail side.
Yeah.
On the wholesale side, I think the methodology of going from what's the most interesting new piece of data I can get out there, testing it, putting it in a model, and running that into production, back testing, et cetera, is relatively well developed. Though you still sort of worry, given recent news on trading in various places, is it being brought together in an intelligent way? And in some places, are folks still getting lost in the model? And the output looks great. I think on the retail side, there's a huge gap in still understanding where is the value. Because at the end of the day, I have to sell a single product to a single customer. Now I can sell more and more over time.
Right.
Much harder, I think, for people to get their mind around that, and then all the things that follow behind it, to put the organization behind it, build the skills and capability. Then on the wholesale side, where there'd be no debate, the amount of capital you can quickly put to work is clear. What's very interesting, I think, what's happening, and this is a gap but being quickly filled, is the ability to test quickly. Small offers, build models quickly, get them out there, see what the results are, and before you scale up. Is a kind of inductive way to get there. I think the thing that's still missing is how do I really understand what the total size of the pie will be when I get this? Once that's clear, you'll see money pouring in. But I think there's still small steps being taken until that's fully fleshed out.
But isn't total size of the pie, I've heard you, the total size of the pie this pie is massive. This is not a question on, is it attractive to solve the problems? It is very attractive to solve the problems, isn't it not? Is it not?
In theory, it's quite high, though in practice it gets complicated. The danger in some of this is you get a lot of people signing up for products, but then usage is very low. And now I've taken what was already a high cost structure and added to it. So getting it really sophisticated through the whole chain of here's an offer at the right time, presented in the right way, all these variables, and one that you're actually going to use and it will drive revenue to me through share of wallet or transactions, whatever it is, still to be fully defined. And I think once that starts to happen, I think to Roy's point, there'll be a period of time where folks will make a lot of money and then it will become commoditized, but we're just in the beginning part of that curve now.
Richie, Roy, any thoughts as we wrap up?
I think the opportunity is huge. I think it's huge. And I just want a bit of semantics, but the state of the art versus the state of the practice.
Right.
And I think, as to Roy's point, it really is knowing how to apply it. And that's the state of the practice, and you have to trust it.
That's a great point.
Yeah, so the key training opportunity is for the middle managers, right? So they're the ones that will resist something because they don't understand it. So you have to train them in what the new technologies can do, and you have to get them comfortable with making decisions based on it. So that's actually a big task order that some companies will succeed in and many will fail.
Well, gentlemen, on behalf of the audience of Strata, thank you so much for doing this. You guys are very good friends of the firm. You've been very kind to share your wisdom. And a big round of applause for our panel. Thank you so much.
Thank you. Thank you.